All right, so when you hear the words corporate accounting, your mind probably jumps straight to taxes, right? Balance sheets, reports for the government, that kind of thing. But what if I told you there's this whole other side to accounting, a kind of secret weapon that the world's biggest companies use, not just to report their numbers, but to actually steer the entire ship? Well, let's dive in, because we're talking about SAP Controlling. I mean, really think about that for a second. How does some giant global company actually know which of its products are making money and which ones are just draining resources? Or, whether the marketing department's budget is being spent well? It's not magic, that's for sure. It's a system, and it's a system designed to answer exactly these kinds of questions. It's a serious competitive edge. Okay, so this right here splits the world of accounting in two. It's pretty simple. On one side, you have financial accounting, or FI. This is the official, super rule-bound stuff for outsiders, investors, banks, the government. But on the other side, you've got managerial accounting. And in the SAP universe, we call that controlling, or CO. This is for insiders. It's flexible, it's detailed, and it's all about giving managers the data they need to make smart, strategic decisions. And that is where we're going to focus. So here's our game plan. We'll touch on that insider versus outsider idea one more time. Then we're going to look at what I call the company's financial map. From there, we'll get into the real meat of it, profit centers versus cost centers, and learn the language the system uses to talk about costs. And finally, we'll put all the pieces together and see how this whole thing helps people make way, way smarter decisions. Right, so before you can track a single penny for any kind of internal analysis, you need a map. You have to know how everything is laid out. And in the world of SAP Controlling, this map is the organizational structure. It's really the blueprint for the entire business. So at the very, very top of this map, you have something called the operating concern. The best way to think about this is like the entire business empire. If we're talking about a global coffee company, the operating concern is everything. Every shop, every brand, every country. It's the highest possible view for looking at profitability. Okay, now let's zoom in a level. That empire is broken down into controlling areas. And this is a really important idea. A controlling area is like a self-contained little world for all the accounting. So if our coffee company has a North American operations and a European operations, you absolutely cannot mix costs between them. A cost from a cafe in Paris can't get assigned to a shop in New York. It keeps everything neat and tidy. And then we zoom in one last time to the most detailed legal level, company codes. This is the actual independent legal business entity, the one that has to file taxes and prepare an official balance sheet. So you might have Global Coffee Inc. in the US and Global Coffee GmbH in Germany. This is what links us all the way back to that external financial accounting world we talked about. All right, we have our map. Now we need to start labeling the locations on it. And in controlling, every single part of the business gets defined by a really simple question. Does this part of the company make money, or does it spend money to support the parts that do? And this breaks it down perfectly. A profit center is anything that brings in revenue. Think of a specific product line, or maybe a single store in our coffee chain. Its job is to be profitable. A cost center, on the other hand, doesn't sell a thing. It just, it incurs costs. Think of your HR department, or IT, or the team that does maintenance at the factory. They're absolutely essential, but their goal isn't to make money. It's to manage their costs efficiently. Now, these cost centers aren't just a random shopping list. They're all organized into a logical hierarchy, one that actually mirrors how the company is structured. So you can see here, you might have individual departments like finance and HR, and they all roll up into a bigger group like headquarters. This is so cool because it means managers can look at costs at a super detailed level, like just the HR department, or they can zoom out and see the total cost for the entire HQ. So we've got our map, we've got our labels, but how does the system actually track the money that's flowing around? Well, for that, we need a common language. And in SAP, that language is built around something called a cost element. The absolute key thing to get here is that a cost element is basically a bridge. It's the thing that lets a transaction from the outside financial world flow right into the inside controlling world. Every single expense account you can think of, office supplies, salaries, rent, it has a matching cost element. They're like two sides of the very same coin. Let's walk through a real example. Let's say somebody buys $1,500 worth of office supplies for the marketing team. Okay, so in the financial system, the FI system, that transaction hits the supplies expense account. But here's the magic. Because that account is linked to a cost element, the system automatically creates a parallel entry in the internal CO system, and it assigns that same $1,500 cost directly to the marketing department's cost center. It's instant and it's totally seamless.
Okay, deep breath. We've laid all this groundwork, right? We have the map, we have the profit and cost centers, and we have the cost elements that track all the money. So what? I mean, what's the big payoff for doing all of this?
This is where it all comes together. With all this data structured so perfectly, managers basically get business superpowers. They can run a profitability analysis and see not just that a customer buys a lot, but whether that customer is actually profitable after all the discounts and support costs. They can calculate the true, precise cost of making a single product, which is just critical for setting prices. They can get a real handle on overhead costs. And, this one's huge, they can compare their budget to their actual spending in real time to see exactly where things are going off the rails and why. You see, all of these tools, this whole structure, it's all pointing to one single goal: giving people inside the company the information they need to make better, smarter decisions that push the whole business forward.
I really love this quote because it just nails the entire philosophy here. Making a budget, that's just the first step. It's the means to an end. The real goal, the end result, is having the control. Having the insight to see how you're doing against that budget, figure out why you're off, and then do something about it. That right there is the whole point of controlling.
So, the biggest thing to take away from all this is that SAP Controlling isn't really about accounting in the traditional sense. It's about building a living, breathing financial map of your whole organization. It gives you this incredible power to see exactly where every single dollar is going and how well it's being used, which leads to a final question for you. If you had that kind of detailed map for your own team or for your business, what's the first thing you'd change?